Alright, welcome everyone. So good to have you all with us this evening. It's going to be a lot of fun. Last week, for those of you who have either watched the recording or with us live, we went through all the details of all the different moving averages that make up TRENDFORCE and how it all functions mainly around the trend zone. So if you're unfamiliar with our rules, if this is the first video you're finding online, we've got 4 very simple rules for applying our strategy. They spell the word TASS, T-A-S-S, and it just works. So T is for trend zone. Last week's session covered that in detail. The A is for the angle of the 21 moving average 3 time frames higher, which might sound like gibberish without seeing it. But we've got, so T for trend zone, A for angle, then S for clear space, which we've covered a lot, but we will touch on it again potentially tonight. And then the 4th S is for the signal. And so we've got a buy signal, we've got a sell signal, and then we also have a few other bells and whistles that fire off. Emojis, rockets, diamonds, the whole shebang. And so tonight we want to go through in detail what each of those signals mean and how to approach using them so that you can use them to your advantage. So without further ado, guys, thank you for tuning in with us live. I can see so many of your names that I love and can't wait to see in person at our next event, which we haven't got a date yet for, but love it. The next time we have one, make the effort to be there. It's always so much fun to be able to spend some time together and do one of these in person where possible, right? So guys, I'm going to find Dad. I love that. Mark saying good morning. Good morning, Netherlands. It is definitely the opposite on this side of the world, but I love that. International family. Mark, so much love and appreciation for you, bro. Okay, Dad, I'm going to find you, pin you in the chat, and let's rock and roll into it.
I am here. So good evening, everyone. Good to have you joining us. Always good to see you guys, eager to learn. I mean, I trust you are loving this journey. I am absolutely loving this, and I trust you are too. And I find such joy helping people. And I've said it before, my passion is to see people get out of the rat race, to serve you people, help you people become successful traders. I mean, it does take a while, but hopefully with what we're doing with TRENDFORCE and our education, our teaching, our training, and the indicator itself, we're going to see people get profitable and become very consistent traders. But I really believe that this is a great way and a great opportunity to find another stream of income and eventually become your sole source of income. So you don't need to labor for hours and hours and hours. So I mean, for me, it's just a real joy. I just love this. I think this part of my makeup is teaching and helping people. So I think I'm in my zone doing this tonight again. So I'm going to go share my screen, Ty. So if you can empower me, and hopefully my screen's going to come up there. Share. There we go. And I'm going to try and move all your wonderful faces to my top monitor. See that? Oh, it works. Okay, so now I can see. That's awesome. Okay, I've been doing a bit of experimenting with Ty in the week and just practicing to see that everything works. So, all right. So last week, as Ty said, we covered the main trend zone. So right now on my screen, I've got the 3 minutes at the bottom, M3, and I've just written these so you can see M1, top left, and M8. So those are the main 3 zones that I look with and I trade with. I love the 3 minutes. So, I mean, one night I want to talk a lot about why I like the 3 minute, but I said to Ty, I can't remember when I last took a loss on a 3 minute trade. When I do make losses, we all do. It's always generally on a 1 minute. The 3 minute I find is very successful. So this is my setup. I'm just looking for good opportunities to find trades on the 3 minute. All right, so as Ty said last week, we went through all the main trend zones. So main trading trend zone, blue up, red down. Plus we can see we've got our 55, which is the equivalent. Well, on the 1 minute, that'd be the 3 minute, but the 55, the 233, 987, and right down there is the 4181, which is the 4 hour and the 1 minute. So we're not going to spend more time on that. Tonight, I'm going to go through some of the icons in greater detail and work through those, and then also answer some of the questions. And as I put in my little video earlier, a lot of you were really keen on the MACD. So we're really going to give a whole evening to the MACD. So that's going to be really awesome. That's going to be next Tuesday. So if I'm going to go just for the sake of completion, we went through these little icons. So the green triangles up and down. We discussed that last week. So basically, if you're on the 1 minute or whatever time frame you're on, this means you're back on trend. So remember, I did in detail last week, the 233 is the main zone for which we work out our signals. So you'll only get bar signals. You can see there's a bar signal when we're above. And likewise, although price moved down, we didn't get a sell signal. We got a counter trend because we're still above that 233. And we got a sell signal there further down the track because there we were below the 233. So whenever you're back on trend, so there we got a green triangle, mean we're back above all the major trend zones, and then we'll start getting bar signals. And so that was all of last week's training. But I say tonight we really want to look more at all the little icons and go through them in greater detail and then answer questions. So I'm excited about that tonight. And so we really want to look at the icons that are associated with mainly with the buy and the sell signal. So all of us would, of course, be familiar with the buy and sell signal. So there's a buy signal. This was on Tuesday, this morning at 5:09. And you can see, again, I'm not going to spend too long. Whenever you get a bright signal, it generally means a stronger trend. So there was a great buy signal, bright green, and up price went. But let's actually look at that before we digress, because one of the rules is look 3 time frames higher or the higher timeline. So that normally would have not scored very highly, because we can see, if we look at that signal over there on the 3 minute, on the 8 minute, we can see we wouldn't have got 2 points because the trend zone was still in sell mode. But there would have been a good reason to still take that trade. So it's always good to put a bit of price action in. And that's simply because of what took place. If you look at these 3 candles right over here, you've got a bearish candle, then you've got a doji, and you can see that doji is right above the 233 on the 8, then you've got bullish. That is the classic sign. That's why I like these Heikin-Ashi candles, because that's a classic sign of a reversal. So though we wouldn't have got 2 points for the trend zone, we would have got, maybe would have got 1, wouldn't have got 2. That's still been a good trade based on price action, bearish, doji, bullish. So if you do trade and trade with Heikin-Ashi candles, I'm always looking for that pattern. And especially the Heikin-Ashi, the higher the time frame, the more accurate they become, that would have still been a good trade to take. Anyway, so let's go on to the other icons. So we're looking at all the icons that are associated with the buy and sell signal. Now remember, I already mentioned our 4 rules for 5 points: TASS, our trend zones, angle, space, and then S signal, we're looking for confirmation. So what I'm looking at tonight, we're going to be looking at diamonds, we're going to look at the boost, and also we're going to look at the rocket. So hopefully that's clear on your screen. You can see those 3. So those are 3 key icons that help us make decisions in terms of entering trades. And so let's have a look at them one by one. So I did say these are as good. And I think one of the questions that I think Wayne, I can answer one of Wayne's questions now. I did say they're as good as buy and sell signals. So when you see these icons, you got to also look at the other rules, but they can be as good as buy and sell signals. So when you see that rocket, we'll look at that in a minute, price rocketed down. When you see a boost, it may not be clear on the 8 minute, price shot up. So sometimes these signals will plot, not often, but sometimes they will plot without a buy or sell signal. So again, here's an example. There's a rocket. That's very strong. We'll analyze that in a minute. There was no sell signal, but price did rocket down. So that can be as valid as buy and sell signals. So the reason why I put these in the whole strategy, I know it is we've said many times, it is quite a busy indicator. But I loved, all of this has been my journey of trading. When I had the sell signal, I often wasn't confident, or buy signal, should I take the trade? But because these are as good as buy and sell signals, these extra icons, the diamonds, the boosts and the rockets, it can give you greater confidence and indicate that the trade is really going to move. But the most important thing is, what I love in trading is getting into a risk-free position early in a trade. So, I mean, often I do get stopped out, like all of us, for a couple of pips, but less and less as my experience grows. But when you see a signal combined with a diamond or a boost or a rocket, it's a clear indication that that trade is going to move very quickly, and then you can move your stop loss into break even and then into profit quite early in the trade. So let's look at these all one by one. So when we see diamonds, so they will appear, quite often. We can just look back. And let's find a good example of a diamond. I'm just scrolling back here to see one. Well, you can use them for entries, re-entries. So where are we going? Let's look for our first diamond. I've got too many boosts. They're all covered in one. So here we go. So here's a diamond over here. So when you see a diamond, that stands for buyer momentum. And likewise, if it's a red triangle, then it stands for seller momentum. So those are very good indications of price moving. So very seldom will you get a diamond and not see a movement. So though we're in a counter trend position here, there's a diamond, and we can see that we didn't get a signal, but that diamond was a good enough sell signal. That's very strong. There was a 30 pip move down after that diamond. So always keep an eye out for those diamonds. They're always very good. Here there was a buy, and especially I was going to say it later, I say it now, when you see a combination, there's a buy signal, and we got buy momentum. We can see from that signal, strong signal there, that was a 54 pip move up. What I like about the diamonds, they also give us warnings. So often they will appear before a buy or a sell signal. So that's another reason why I put them in this indicator, is that they give you good warnings. Sometimes they may come one candle early or even two candles early, and that means momentum is changing. So those diamonds are really measuring momentum, buyer and seller momentum. And the strength of having the diamonds, and I'll come to the boosts afterwards, is that they all use completely different data. So the data that calculates the buy signal is different to the diamond and also different to the boost. So that makes them very, very reliable. So basically the diamonds are primarily measuring momentum. And so when you see a green diamond, it means that momentum has shifted from sellers to buyers. And likewise, a red diamond over here, for example, means that momentum has shifted from buyers to sellers. So we can see buyers try to push price up. That diamond means the buyers didn't win. Seller momentum strong, and there was that, whatever, that 30 pip move down over there. And so always be looking for those. They are valid buy and sell signals. And then the boosts. The boosts, as I said, they use different data. So the boosts are looking at, they are calculated, and I'm not giving my secrets away, but basically those boost plots when price clears a particular level. So once you see a boost or a rocket, so here, for example, on the 8, we see there is a boost signal with a buy. Here's actually a good one to analyze all three. So here we got a warning. That diamond means that there's now buyer momentum. And whenever I see a diamond, I'm getting prepared for a signal. I'll always be looking at high time frames, positioning myself. There we have a buy signal with a boost that is plotting over that triangle. So it may not be clear, but there is a boost signal. So boost means that price has broken above a level, a significant level, and there's a high probability that price is going to, for example, in this case, move up. So we see in this case, this was a huge move up. So there we had a boost. That candle would have opened way down there. There was a 70 pip move up. So these boost signals are very strong. And so when you see a diamond plus a buy signal and a boost, I mean, three of those together, that makes a high probability trade. You won't always get them together. You may just get a buy signal and a boost, or a buy signal with a diamond. But there's always a strong indication of a move. Another good thing the diamonds are useful for is for re-entry. So we can see there's a diamond over there, and that means buyers are pushing price back up again, and that can be a safe entry point. So this was on, let's just see, it wasn't a big move, but there was almost 30 odd pips in that move there. So always be looking for diamonds and for the boosts. So, I mean, Ty will know that these boosts are very, very accurate. So whenever you see one, you'll hardly ever see a boost and price not move, and especially when they all are grouped together. And then Wayne also had a question about the rockets. Are they a combination? And we'll have a look at this rocket. So I did say they are as good as buy and sell signals. So here we got a rocket. And a rocket is when you have a combination of a diamond and a boost. So not only has price broken a significant level, there's also momentum at the same time. So in this case, this rocket would have meant not only has price broken a record, broken a significant level, but there would have been momentum as well. So if I just show you how this works, I'm trusting my program is going to work now. So let's just open up the open up our input. So if you look at that diamond signal over there, all right, so what that diamond means is you've basically got seller momentum and the boost combined. So if I turned off the boost and rocket signals, you'll see that rocket will disappear. And what should happen is that, can you see now a diamond has appeared on top? So if I turned off the diamond, I'm just having some fun with the indicator here. If I turned off the diamond and turned on the boost, so I'm going to turn off buy and seller momentum, you'll see only a boost should appear. Now the diamond will disappear. And what happened is, let me click OK, and you can see a boost. So it's just to clear up the noise. So when you see, basically it's a combination. So I'll just turn it all back on again. Turn back on buy, seller momentum. So it's basically just telling you that that is a stronger signal. So I mean, that was, look, there was a rocket signal was plotted before even the counter trend, and there was a 50 pip drop. So those are very, very strong. So especially when they appear together. And also, it's always good to keep looking at higher time frames. So let me just see if I can find an example here. So let's just see what is happening here. Let's see if I can find an example. So this is pretty close. So let's see if there's a better one. Let me have a look here. Just go back. So if we look back, right back here, let's go back for combinations. There we've got a counter trend signal. So this was going back to Monday, 10 o'clock if you're trading late. You'll be wondering, how strong is this counter trend signal? So we're looking at the 3 minute. Should I take it? Shouldn't I take it? Always look at the higher time frame. So in this case, the 8. Can you see what happened on this counter trend signal on the 3 minute? At the same time, can you see on the same candle, there is a buyer momentum, which is pretty strong. So that would have made that signal so much stronger. I don't take every counter trend signal, but when you see, for example, a counter trend signal, and then on a higher time frame, there's a combination of either a boost or a diamond, that can mean that price is really going to move. So I mean, that wasn't a massive signal. There was a pullback in it, but still there was 30 pips in that trade. But that diamond would have given you confirmation. And likewise, you would, if you were stayed in the trade, there was a bit of a pullback there. Should I stay? And that's what I like about this indicator. While price was pulling back, we can see a boost and a buy signal appeared on the 8 minute. And so whenever I'm trading, I'm on one time frame like the 3 minute, I'm always looking to higher time frames to see what is happening and looking for confirmation. And now with these icons, generally, so it's not always true, but most of the time, the rockets and the boosts will only appear once in a trade. And the reason is because the boost, now this is an example this would have been a boost plus a diamond. That's why we got a rocket. These only appear once because these are programmed to plot only when price has broken a significant level. So once a diamond, say a rocket or boost plot, generally the trade tends to run and they won't appear a second time in a trade. Occasionally they do, and that can be a strong indication, again, that price is going to move higher. But generally, when you see a boost, for example, here's on the 8 minute, there was a boost down here, and that was, what is this trade? This trade went quite far. That was a 74 pip trade on the 8 minute. We only see one boost in that trade. However, the diamonds will often appear more than once. In long trades, they may appear 3 times. That's again because they're using different data to plot. And so again, they are confirmation that momentum has shifted, but they also are great for re-entry. I mean, this is the trade that I took. I'll just quickly change this to the NAS. The NAS, I mean, I did stuff up the trade slightly. I'll just be real with you. So on Saturday, I was wanting to take my dog for a walk. Let me just go back to Saturday. That's Monday. I'll show you the trade I took. Here's the trade I took on Saturday. I messed it up a bit.
It's always Rocky's fault, isn't it, when it doesn't go to plan?
Blame
the dog. The dog ate my homework. I mean, no, the dog interrupted my trade.
Yeah. So this is the NAS. I mean, I stuffed it up a bit. I mean, I still came with pips. I missed the buy signal. I didn't have my alerts on. And so I came back. I think I got up to get a banana, actually, because I always take a banana before I walk. And then I saw prices pulling back, and I got in here, diamonds. So diamonds are great. I got in on this trade, and there was a good 30 pips there. The big round number was, there was a big round number right over here. There we go, 22,100. I just set a 30 pip target. I mean, I should have, and I was anxious to go walking. My wife was saying she was ready to walk. So I got in here and I set a 30 pip target, and price was moving up nicely. And I moved my stop loss to about 2 pips, then 10, then 15. Then when it got to 25, I thought I'm not going to take less than 20. So I moved my stop loss to 20. And of course, it just pulled back, stopped there for 20, then whacked up at my target. So I mean, I still got 20 pips. But the point I'm trying to make is that these diamonds are very good for re-entering trades. So generally, whenever you see a diamond, and especially, I mean, I taught at one of our live events, whenever price pulls back into your trading trend zone and you get a diamond, that's always a great, great place to enter the trade. And so always be looking for boosts. Here we go. This was a great buy signal. This is the one I missed. I was getting a banana, I think. I mean, this was, you got a diamond warning you. Plus price has rejected the 233. This is the 3 minutes. You got a buy signal and a boost. And then there was a nice little move up there. That opened quite far down. I mean, there was easy 40 pips, 30, 40 pips in that move, pull back, and you could have grabbed yourself another easy 30 pips over there. So these are always, whenever I'm trading, I'm looking. So especially for our fourth rule, S, that is not just for signal, but it's for signal confirmation. And here again, this is on the NAS. There you got a diamond, there you got a buy signal, and you got a boost. And that trade, look, there's a nice little trade there too, if you held your nerve through the pullback. Anyway, just wanted to show you that they're great. Let me put the US 30 back on here. Okay, so let's just clean that up again. So again, they use different data. So whenever they use different data, that's always healthy because it's measuring different things. All right, so where was I? There was I looking. So again, so the diamonds are a key part of the strategy. So there were 3 reasons why I included them. I'll just summarize. 1, they give you early warning that potentially a buy sell signal is coming. Number 2, they're great confirmation for a current signal. So if you get a signal with a diamond, like over here, there's a buy, that's a strong signal, buy signal and a diamond, generally means a strong trade. And then for re-entry, I really wanted in this whole strategy to find a very good way of giving you confidence to re-enter a trade. All right, so again, always look for combinations of signals. So when you have if you're trading on the 3 minute, for example, well, let's just flick this around a bit. Let's just make this, I'll just change this to the 1 minute, and let's just see if we can pull out some examples, a bit rangy there. Let's just go back to when there's a bit of movement and see if we can find a good example. All right, so we'll just change this to the 3 minute quickly. So if you trade in the 1 and the 3, let's just see what is happening here. So here's a good example. So I'm just picking out randomly. So here there was a buy signal. Now look, we're not analyzing for points. I'm just trying to make a point about always look for higher time frame confirmation. There was a buy signal, there was a boost, then a buy, and at the same time in the 3 minute there we had a diamond. So I'm always looking for higher time frame confirmation. I'm looking for boosts, I'm looking for rockets, I'm looking for diamonds on higher time frames. And that always is a safe way to trade. Always be looking for these on high time frames. And remember, high time frames bully lower time frames. So when we see these icons on high time frames, it's a high probability that price is going to move. Then just to look at some other few little icons before we answer some questions. We're doing nice for time here. Let's just change this back. This is my 3 minutes, and that was my 8 minute. I'll just set that up again. So there weren't a lot of examples. Looking back here, I'm looking for when price breaks. Here we go. So, I mean, it's not a great example. Things are a little bit rangy. But the other icons are the lightning bolt. Whenever you see a lightning bolt, it means that price has broken through a supply and demand zone. Now remember these supply and demand zones, you look how price has moved up here. Whoa, there was a nice, whoops. These supply and demand zones are either these green bands, or there will be one at the top here. There should be one, hasn't plotted yet. or let's just see where there's a red band. We'd have to go back a bit. So here we go. So these zones here, this is a supply zone. So they plot whenever price reverses, and they do take some candles to plot. But whenever price breaks through one of those zones, you will always see a lightning bolt. So, I mean, because I understand the indicator well, there would have been a supply zone. This red resistance zone would have plotted from that wick across there. So when price crosses a zone and closes above, it plots a lightning bolt. And that always works both ways. Let's just see if that's straight. So we haven't reached that one yet. And likewise, this bolt would have plotted. There would have been a demand zone over here, somewhere further back, and that means price closed below. So you can sometimes treat those as signals, but of course, just make sure you always trade with trend. So that's another icon. So again, here's a good example. This is on a 1 minute. There we got a lightning bolt. It's a bit crunched up, but there would have been a resistance zone over here, and that price breaking through the resistance zone, that bolt would have plotted, and there we see price always tends to move up. That was really a good move. Wow, look at this. What time was that? That was at 19:12. That wasn't even near the open. Opens at 9 o'clock. How big was that trade? Let's have a look. Look at this counter trend signal on the 3 minute. That went up how many pips? There was 60 pips. Wow, that's a good counter trend signal. All right, so those are the lightning bolts. And then the last one is higher highs and lower lows. I've covered that before. I want to move on to questions soon. But these stars plots. Now you can remember the indicator. You can set how many bars apart you want. So if we go, let's find where it is. Higher highs, lower lows. So that's a high star, and the lower. I've got this one still set on 50. I'll normally keep them at 20. That shouldn't affect this plot. But that just gives you your last low, and then it gives you the next high. And remember, they will keep plotting. So if price moves up, once it breaks that position, that star will move across and keep plotting. So it's quite good to have that, because often if price pulls back, when it breaks a previous high or a previous low, those stars will plot and keep on plotting. So once price does break a previous high, it tends to run a little bit more. So those are things to keep your eyes on. So Tom, not sure there are any questions. I've just been rambling along, but otherwise I'm going to start answering some of the questions. Those are mainly the other icons that I've been going through. Are there any questions there?
Good stuff. Wayne was just asking a couple minutes ago about could you jump on gold and please show us your process of actually executing a trade. I find it quite cumbersome and difficult to execute quickly, so I'd be keen to see your process. Okay. I mean, I know gold's not your main chart at all, but maybe he's familiar with or been looking at it.
Okay, let me just go to gold trading chart. Where's my gold?
That was cool.
What is cool?
Oh, just that layout option you clicked there. Anyway.
Yeah, that's how I set up my chart. So let's have a look what's happening with gold. So there was a signal over here. So that was on the 8 minute, 15:36. So let's just have a look. So how would you execute a trade? Is that the question? So what is the question? How would you execute a trade?
Oh, sorry, yeah, I muted myself. Yeah, basically going through your process of executing a trade. Like I mean, obviously you're only going to be seeing one candle at a time in hindsight. So whether or not it's, observing it as, draw a vertical line somewhere on the chart. You're going to, because the next question from Kat is, what is your main time zone for placing trades on? Have you got a preference? So, I mean, if you're letting the 3 minute be your leader, then you're going to be drawing a vertical line on that and then looking and checking higher, etc. Just go through your process.
Well, let me just change. I'll just change this. This is, if you're just looking at, this is quite a good way to analyze trades. So, I mean, the key part of this indicator, I'll just do, a lot of people do the 1, so I'll just change this to 1, and let's put this one on the 3 minute. So, and I'll just blow this up a little bit here. And so if you have a look, let's just have a look at this trade here, for example. So we'll just blow it up a little bit so it makes a bit more sense.
I'm kind of hoping that you do it live rather than going backwards, because when we are trading, we've got to make a decision on the spot.
Oh, you want a live one now? Well, look, we have to wait 20 minutes for a trade for on.
Well, you might get it. You never know. You might get a diamond or something over a pair in the next 2 minutes. The
Yeah,
thing
well,
is, you don't know what's coming up, but you've got to be prepared to go
basically, this
at a
is
moment's
if
notice,
you.
don't you?
Well, I mean, we could wait a
Well, I
long.
mean, essentially, we're going to give 90 minutes to that on Thursday morning. I mean, that's
Yeah,
what we're
yeah, that's what
basically
we do on
doing.
Thursday mornings.
Is
Right.
So,
otherwise we might be watching paint dry right now. But
yeah,
if something pops up, if something looks like it's approaching the
yeah.
zone, otherwise we'll spend the next 20 minutes watching paint dry, waiting for a moment that's. But I mean, right now, is there anything? It's just looking at it, going, is there an opportunity right now? Yes or no? I mean, there's counter trend stuff there happening.
Yeah, it's kind of, I mean, there's a pullback taking place. I mean, everything's up on gold except for the 4 hour. So, I mean, you could get a counter trend on the 1 minute. So, I mean, we could keep an eye on it, but I mean, we could wait quite a long time for an actual signal. But on Thursday morning, that's what we do. We look for live analysis and we look and jump on signals and give them scores. There may not be enough time now to do that. So, we can just keep our eyes open. So, I'll just go back to just answering some of the other questions. So, I'll just go through the questions. We're doing great for time. So, Louise. This is quite good. She said, I'm pretty good with my interest on gold, but at the moment, I'm often either exiting too early or too late. I know this is probably pretty basic, but some tips and tricks would be appreciated. Well, I mean, I can give one immediate, very quick answer. The thing with gold, if I compare the main three things, I mean, look, we all trade a wide selection of indices and currency pairs and things like gold. So, but the main ones most of us trade are either the NAS, the Dow, or gold. So if I rated them from easy to difficult, the NAS is the easiest, the Dow is like the middle, and gold is the toughest. And so gold takes a bit more experience to trade. And the reason is because it's very wicky, or some people say, yeah, it's very wicky. So with gold, it's quite if you use a trailing stop loss with gold, you're likely to get stopped out often in trading. And so gold takes entire, you can comment because you trade gold more than I do. Gold's probably the hardest of the three to trade because there are a lot of pullbacks and a lot of wicks. So you need to be confident of price action and more confident of your trades with gold. And so if you enter a gold trade, you've got to move your stop loss up way slower. Whereas if I'm on, for example, I'm not on gold now. If I'm on here, here's a good example. Let's just look at this at a 1 minute trade. This is what have I got here? This is the Dow. And so generally, if I use a trailing stop loss, you can see often it's not always like this. But I'm just giving an example. Generally, with the NAS and the Dow, you can tend to that's why I like Hakanashi. You just use a trailing stop loss until you get stopped out. So that's one way. So if you did enter this trade, you could have entered this trade. You could have made a valid entry on either of those two candles. That one would have been valid because the main trend bar is bright green. You could have entered on the triangle there. That's also a valid signal. And then you could have waited to get into profit or you could have just slowly moved your stop loss up. But what happens with gold, let's just see if we can find an example. It's not always true. But with gold, here's a good example. So if we just blew this screen up here, gold often has a lot more wicks. Now, not always like that, but generally you can see here there's wicks. And so with gold, you've got to be, you can't always be sure that you're not going to get stopped out if you're moving a trailing stop loss. So I'm answering the question. With the NAS and with the Dow, generally it's pretty safe to use a trailing stop loss. Whereas with gold, you've got to let it run quite a bit and move your stop loss up much slower. I know my youngest son stopped trading gold. He got so tired of getting stopped out with small profits that he's now moved to other things. So Ty, do you want to comment on that? Because you do a lot more gold than I do.
Yeah, I mean, man, I found for me also like the Dow did that a lot in terms of just the aggressiveness. Like I found
Yeah.
historically the NAS is probably one of the most polite moving.
Absolutely, yeah.
If you're looking for like that's why I spent my first year only on the NAS, and
Yeah,
then my second year the Dow, and then third year on gold.
yeah.
So yeah, I'd say also for me, I do a lot of zoomed out analysis to identify zones, and I have an understanding of price action where for me, TrendForce is a big confirmation of what I see happening in the way that price moves between different sessions around the world. And so once you've learnt a whole lot of different things, you can't unsee what you've seen. So I see fib zones, I see all sorts. But then, yeah, with gold, like for instance, I mean, this morning's trade I took was I got pretty flippin' lucky that I didn't get stopped out, but I knew, like, I just could tell that price needed to come down and correct. And I actually thought I hit my stop, and I didn't look at it for a while. And then, sure enough, actually, it ended up hitting my TP, but it came within like half a pip of my stop loss.
Mm.
But anyway, but yeah, it does. Like getting fine, you're gonna fine tune your stop loss, trailing stop, that kind of thing over time as you begin to get familiar with the feeling of a chart. And that's why I tell most people stick with one for a year. And like whether it's the NAS or gold or the Dow, if you're new, don't try master three charts at once because they each have a different nuance to them.
Totally,
And
yep.
so now for me, I can bounce between all three of them because I've got more than a year on each of them exclusively. So yeah, if you're brand new, and then I would say maybe look at the NAS first. And like for instance, if you're trading London, I wouldn't be bothering much with the Dow because it moves better on American volume. So if you're going to be trading mostly at nights, then there's no point really probably becoming a professional on the Dow. Those sorts of things. It just depends. So Nikki agrees. Thanks, Nikki. Appreciate that. Here, what am I missing? I'm just seeing the questions here. NAS momentum diamond on the 1 minute. Okay, so there might be something on the NAS to look at or break down and check out.
Okay.
I'll keep my eye on gold in the meantime as well.
I've
Yeah,
got that set up for something else I want to teach. I'll just quickly change this to the NAS quickly. Let's have a look what's happening here. There's a diamond there. But you can see the problem there. Look at the MACD. That's in sell mode. Let's look at a high time frame. Let's just change this to the NAS quickly. Have a look what's happening on the high time frame. You can see already you got some we're going to do MACD next week. You can see the histogram's going opaque. And we'll mention this next week. That's a great measure of momentum. And we basically here we're in sell mode. It looks like we're already opaque, in sell mode. So price could be moving up again. But that would be a risk taking that trade right there. So based on the fact that the MACD is basically crossed over as in sell mode, that means momentum has clearly gone out of this trade. So sometimes when you get a diamond, the 3 minute may still have some bullish candles. I mean, it could reverse and go up, but then I would like to see, maybe this histogram go back to the fuller green color. So that shows that's a sign that momentum was really lost in that trade.
Yeah, and the only thing that would help you maybe think about sticking in that is if you had a real strong conviction about like bullish divergence. So that means prices pulling back and likely to still go up, but it is way riskier when that zone is closing in.
Yeah.
That's the power of the trend zone. Like if you like, we'll get into that on the MACD training next week. But if you're only like divergent, there's a reason why I don't trade divergence only. It's just anyway. I won't get into the nuances of it, but it can be helpful. But the biggest key is identifying momentum and trend and riding that at the most ideal moment and just recognizing, you know what, you are going to miss some because you erred with safety rather.
But the best thing is to get on the main signal. So, and there was a pretty good signal there. I mean, the MACD, we weren't quite aligned with the trend zones. We'd have lost the point. But there's there's massive things. Well, let's just look at this signal. I would have taken this signal because we got a number of things happening. We got a bright buy signal. Oscillator's good. On the 1 minute, we got separation, bright buy signal, and we got a boost, and we're breaking above the POC. But this is a good illustration.
Let me interrupt you for 1 second, Dad. If you're talking about taking the 3 minute buy signal, the original one?
3 minutes, yeah, 3 minutes.
Can you draw a vertical line on it, please, so that we can see it on the other time frames at the same time?
There we go.
And then just right click on it and click sync global.
Yeah, sync.
because now we'll see what you would have been seeing. One more. There we go. That one. Now, there we go. Okay, so that's when it went off on the 8-minute, and then you're gonna have to find it on the one further left.
Yeah.
Maybe even wait. Sorry, maybe right. We're already there. Where's it gone? That's on the Dow. Sorry.
That's on the Dow. Let me go back to the NAS.
There we go.
Okay, there we go. So that would have been, that's a good signal. Now, the reason is because it's good is because although we're not aligned here, our angle of the 8-minute is like flat, so it's not down. But what is good is on the 8-minute, you've got a buy momentum signal. So that's very strong. I mean, that is basically as good as a buy signal on the 8-minute. But what is also important is price has bounced off the 55 on the 8. It's rejected. And the 55, I mean, I haven't said it often, but the 55 is massive in terms, that's one of the reasons why it's in the indicator part of the strategy. When price rejects the 55, you could almost enter almost any time because it's so strong for rejection. So that would have been a good signal. I would have taken that. That would have been a very good signal, a 3-minute with the boost. And that I will tell you, the boost on the 3-minute is very accurate. That would have been a good signal.
Very cool. And yeah, I mean, if you're like you said, like if you're approaching it as the 3-minute is the one you're trading off, then you're looking higher. But then you can also see the 1-minute is giving you some beautiful signs there.
Yeah.
You're above the 55. That trend zone's opening up. That MACD is in alignment. So zooming down, but confirms it as well. Yeah.
I mean, you could have, if you were trading the 1-minute, we can answer a whole lot of questions at once here. Let's answer about 3 at once. Brendan asked about the angle of the SMA 21. And so you definitely do not want it going in the opposite direction. That was then it's going to pull back. So on this trade, we can see if we wanted 3-minute confirmation, we are still in sell mode there. So, and also Wayne's question on how late is too late. You always wait for a signal. So you saw the bar there, you could wait for the 3-minute to align. And so basically, if you entered on the 3-minute, that would have been a pretty safe entry, a 1-minute. And so this is also a signal. Can you see the candles have gone from the dark green to the bright green? That is like a signal. That is showing buyers are jumping in the market. And so you could have waited. So you want 3 times high confirmation. That's the 1-minute signal. We're not ready yet on the 3-minute. But you could have entered on that 3-minute signal. That would have been a completely valid trade. Plus, the magic source of this indicator is when you get a 3-minute signal, especially on the 3-minute, and the main trend bar goes bright green, that is always a strong signal. And Brendan also asked about the angles. I'm always looking at the angles. So here we can see we got it at the bottom. It's not heading down. It's pretty flat there. But in terms of a 1-minute signal, that to me would be acceptable. And you've got it on the crossover too. The 3-minute is already separated, so that would have been a great trade to take.
Very cool. Another thing, just in terms of, someone was saying, in real time, at least with the NAS right now, the other thing to think about that no one might be mentioning is the fact that, the NAS made a brand new all-time high 40 minutes ago. So at 8:08. So I'm pretty sure our all-time high 37 minutes ago. So you've got something that is breaking all-time highs on the NASDAQ right now. So you got to be extra careful. Like, yes, it might break up and make another all-time high, but even more the reason to be following the rules when you're in uncharted territory. Just a thought to kind of put in context with that.
Yeah, so just to go back to Brendan's question, he looked about the rhythms between the 1, 3, and 8. Look, you don't have to look at 3 time frames at once because, 2 is enough. If you're looking at the 1, then have the 3 as your next screen. If you're on the 3, look at the 8. I like all 3 because it just gives me greater confidence to enter trade. So again, this is a good example where the white line is drawn. At the same time, a candle is going bright green. We've got a bright green buy signal. We've also got a boost. We've got the trend zone going bright. We've got the 55 being rejected on the 8. Plus, we've also got a diamond on the 8. So when you're getting that kind of unity, we can call it rhythm like Brendan called, that means there's a high probability that trade is going to move and go places, which is exactly what it did there. So I say you don't need to have 3 screens at once, but this is how I like to trade. I look at all 3, And then I mainly like the 3 minutes, and I'm looking at the 8 minute, but I'm also keeping an eye on the 1 to see what's happening there. Any other comments, Trey?
Love it. Smashing through those questions from the chat today. In case you're wondering where these questions are coming from, guys, there were some that were put in the chat earlier on.
Okay, then the other question from Christopher. Let me go back to let me just blow the screen up. And I'll just go back to, this is the 3 minutes. I'll go back to that trade I did on Saturday. I got 20 pips only. Where was I? So where are we now? We're on Monday. Let's go back here. So he asked, let me just get back to that trade. Here we go. This was the trade I took on Saturday. Should have got 30, but I got 20. So he asked about, do we enter a trade only with the stop loss and take profit indicators shown, or allow certain late entry with the right signal indicator printed? So you don't only have to obviously enter with the buy signal with the stop loss and take profit, because once you have passed the buy signal, like in this, the trade I took, then you're not going to get another stop loss and take profit signals plotted. So then you have to just use a bit of common sense. So, I mean, I can't remember exactly where my stop loss was. I think I took a 50. I took about a 15 pip stop loss. So, in fact, no, I took a shorter stop loss here. What I often do, this is a great thing that I wanted to say, is that when you enter on a diamond, almost every time there is a diamond, price hardly ever pulls back lower than the diamond before you get into a risk-free position. So I want to say that again, because that's how I trade. Whenever you see a diamond, price hardly ever pulls back lower than the diamond and stops you out. And that's because these are measuring momentum. So when I re-enter a trade, very often my stop loss is on the diamond. So here, this was a 3-to-1 trade, I only got 2-to-1. There was my stop loss was on about 10 pips, and there was 3-to-1. I would have got 3-to-1. I put my take profit on the big round number, which was exactly, it was about 30 pips. I knew the wick would break through. So whenever I enter a trade, you're not going to get the stop loss. You've got to use a bit of common sense. I just often use the diamond, and then I just measure that's minus 10. Then I'll just either go for a 2-to-1 or I'll go for a 3-to-1. And I was going for a 3-to-1 on Saturday. I said I didn't get there because I moved my stop loss too early, but I still got 20.
That was a golden nugget right there.
Yeah, so look, if you just look here, for example, I mean, for example, there's a diamond. You could have put a stop loss there if you entered early. I mean, there's a diamond. You know, you could have put your stop loss there. You wouldn't have got stopped out. There's a diamond. You wouldn't have got stopped out. So basically, whenever you see diamonds, there's a diamond. You wouldn't have got stopped out. You know, you can often just use the diamonds. Only when the trade eventually runs out of puff, and there would have been good reasons not to take that diamond, you can see. But you watch, just look at the diamonds and use that for your stop loss if you're stuck, and then work out a 2-to-1 or a 3-to-1, and that should keep you profitable.
So good.
All right, I just want to answer one, because that's a good question. I'll go to the last one. I like that one. Mark asked about swing trading. You know, good strategy. Basically, you know, the good thing about this indicator, and it's not only this indicator, but generally any good indicator should be completely scalable to higher time frames. So you don't need different rules for swing trading as you do to normal trading. The only thing with swing trading is you do need, obviously, a higher stop loss. So I just looked at an example here. So if you wanted to do a swing trade, I'm on the NAS, and if you wanted to do a swing trade, this is the 4 hour, and here I've got the 1 day. So if I was a swing trader, I would be looking at, obviously you want a higher time frame. So, I mean, the 1 day would be pretty safe. I mean, you could go for, just make it a 12 hour, but the 1 day would be a good measure to see how safe it is. So here, this signal plotted on Thursday. So this is the 4 hour at 8 o'clock in the morning. So if you were a swing trader, and maybe you set your alert ups for signals, you could analyze this signal and say, would this be worth it? Now, you wouldn't need this would have been quite a big stop loss. You're looking at about a 200 pip stop loss here. So you would want to have a 400, at least 2-to-1, 400 pips This one went all the way to 500 pips. So we can see a stop loss. Hold on, is it bigger? So you need a big stop loss, 238. But look, that thing hit TP2. That was a good trade. There was 400, almost 500 pips there. So you use the same you apply the same rules. Firstly, let's look at trend zone alignment. Okay, we would have got almost 2. We got separation there. We hadn't quite crossed over on the MACD, on the 4 hour there. But if you look at the 1 day, remember higher time frames, bully lower time frames. That signal plotted, and Ty, what do you think of that? That looks pretty good to me. We can see we got wonderful separation on the 4 hour trading trend zone. There's wonderful separation on the MACD. Then also in terms of angle, we can see, look at that great angle. The 1 day is heading up. So we've got a point for angle. I mean, space, okay, we were trading into a zone, but it was a pretty strong signal. I mean, I could put in they'll take a while to load. We could put in some quarterly levels there, and that will take a while. We could see how much space there was. But I'm just trying to show you that you were breaking above a quarterly level, so there was a lot of space. So we look at more quarterly or monthly. Let's pop on the monthly too. I think the monthly was a bit higher up. So we're just looking at how much space there was between the pivots. So let's just see monthly. Okay, there would have been enough space. So from your signal, you can see price did respect that pivot but broke through. There was still, 300 pips, which is enough space. So basically, then we look at signals. There we got a buy signal. We've also got a boost. So basically, everything is translatable. So we use exactly the same principles. We score in exactly the same way. But of course, if you do swing trading, then you do need to have a bigger account because, that's like a big stop loss. So you'd have to have a pretty big account to cover that. But of course, you get your big wins too. So again, I don't try to add anything. I don't do many.
No, that's good. I mean, or essentially just, if you've got 10 times the size stop loss, 10 times the risk, you're just going to have 10 times smaller lot size.
Yeah.
If that makes sense. Like if you just, it's the same amount of risk for your account. You just have to be able to execute a smaller position for the same risk to reward. You're just taking maybe one trade for the week as opposed to one for the day. But that makes total sense. And that's really the beauty of it. You're just zooming out.
I just also looked here. This is the 4 hour. This is going back to November. I just looked at some examples. This is on the Dow. I mean, there was like a 12 and a pip trade over there. So again, if you looked at that signal, that's a very good look at that 4 hour signal. You already had the boost on the candle before. That means it's broken a significant level and is likely to move up. You got a bright green signal, and at the same time, the 4 hour trend zone all green on that candle. So that's pretty good. If you looked at higher time frames, so that on the 1 day, so we're looking for higher time frame confirmation. On that candle, you can see the trend zone is just at crossover, but you can see the main trading trend zone blue. But what's in the favor there is that, look at this, on the 1 day, the main trend bar in our oscillator is also bright green. So, and that went bright green. Look at that. If you follow me, that went bright green over there. So before the buy signal came on the 4 hour, the 1 day main trend bar on the oscillator bright green, high probability trade that. And so you can apply that to all the signals. You just basically look back. So look at this one here. So there we got a buy signal within one candle. You got a bright signal on the 1 day. At the same time, look at that daily signal. You've got arrow, you've got triangle up, bright green on the oscillator. You've got bright green. That trade's going to move. Although the zones were completely aligned, if you're doing on the 4 hour, that still would have been a good signal. You've got a boost plus a buy signal. And remember, on higher time frames, it doesn't get as noisy. So basically, I think I've answered the question. Use exactly the same methodology. You just look for higher time frame and apply the same rules.
So good. One question I just want to clarify, just in case I read it wrong from Kat earlier. When she said, what's the main time zone you trade on? I interpreted that as time frame, but in case it was time zone, what session or time of day do you prefer?
Yeah, well, I only trade in the morning. So that's me. I only trade in the morning. and I'm mainly 90% of the time, I'm only trading on the 3 minutes. So I trade in the morning, and then I just trade the 3 minute in the morning. That's basically what I do.
Mainly on the Dow.
Mainly on the Dow, yeah. What I do is I put the NAS. This screen is my Dow setup, but my NAS trading chart will look exactly the same. And I put that on my monitor, and I look at both. Like on Saturday, I looked firstly at the Dow, and there was a lot of rangy and a lot of hollow candles. And so I brought the Dow, the NAS, onto my main screen like this. And that's why I was just looking at the NAS, looking for 30 pips. So I did mess the trade up. I got 20, but still a win. So that's basically how I trade. But look, you've got to find your own rhythm. But I would say for beginners, if you trade the 3 minutes looking for eight minute confirmation, you'll end up with a very high win rate. I mean, you've got to wait longer and be patient, but it suits me. I mean, I think most of you know I'm a spiritual person. I like to pray in the morning. I don't want the 1 minute you almost got to watch every candle. I just have my alerts on. I just pray, and then I wait for a signal, take my pips, and then I just go back to prayer. So it takes far less concentration. You also have a minute or two to make a decision to avoid a late entry. So, I mean, I just find it easier, the 3 minutes. There are less signals, but seriously, I hardly ever make a loss on a 3 minute signal because you only get one or two in a 2 hour. You may only get one in 2 hours, so they're hard to miss and easy to read. And you can see them coming a long way off. Like, look at this example here. Here you've got this big counter trend move down on the 8 minute, and the same, you have got an odd signal there, but I'll be waiting for the market to turn, and you get a counter trend signal, and on the next candle, 2 candles later, you got an 8 minute signal for confirmation. That wouldn't have been a late entry. I mean, there were a lot of pips in that trade. I mean, the 8 minute, if you took the 8 minute signal, I mean, did they hit TP3? Yeah, I got to TP3. We will call that TP3. I mean, that's a great signal. Hit TP3 for 60 pips. So again, if you're on the 3 minute and you get 8 minute boosts and you get 8 minute diamonds and 8 minute rockets, that's great confirmation that trade is going to move. So hopefully that answers that question.
Nice.
And just go back to Wayne at one more question. How late is too late? Well, you don't want to enter trades when price begins to move far away from your trading trend zone. So I only enter on a signal. And there are plenty of signals. You've got diamonds, you've got boosts, you've got rockets, you've got the triangles, you've got, the trend bar. But I would never, for example, just suddenly enter on this candle. That would be super risky because now, look, price will eventually return back to that zone. You don't know what candle it's going to do. So I only enter on a signal. So if I don't take the buy sell signal, I'm waiting for a diamond, a boost, a triangle, bright green, or I've said too that the 55 going bright is also a valid entry signal. So for example, if you want to re-enter this here, I'm just picking a random example. If you missed the entry and you wanted to re-enter this trade, boom, you could have entered when the 55 went bright green, and there would have been a lot of pips. You could have got almost 30 pips. So that's why we've designed this indicator with plenty of opportunity to re-enter, but always re-enter a trade safely. Make sure you've got some form of signal, and never just enter when price is pulled far away. Like for example, if you're on the 1 minute here, there's no signal, you're well into the trade, that thing could pull back. I'd never enter a trade after we've had no signal for 3 or 4 candles. Always find a signal to enter. Because remember, those signals are basically telling you that there's fresh momentum, that price is likely to move, and you are probably going to get into a risk-free position before it reverses back. That's why we got all these signals.
Absolute gold. A couple more questions. Nikki was just asking about those different tabs that you had there that you clicked. Did you achieve these by opening your TradingView 3 times in different tabs? I don't know if that's a little hack. You're using the app, right? Not the website.
Yeah, but it's the same. If you can save any screen. So
Create
for example, let me just see if I can make a new one. If I wanted to make, you can. I don't know if I've got enough here. Create. Let's just see what layouts I've got. I've got 9. Okay, I'll just show you. I'll model it. So.
And just to be clear, that you're using the TradingView desktop app.
Yeah.
Not the website. Yeah.
So now look, I've opened a brand new, I've got it, then you just give it a name. Well, look, when I save it, okay, so this is a brand new. Then I want to decide what screens I want. Well, I like this layout. Okay. And then I want to delete, I'll clear off, I don't need the volume indicator. So and let's say I'm going to make this one, let's say something, and let's say I wanted to use this one to make, I've already got a screen, but I want to use this for, let's make a Bitcoin screen. So there we go. So I've made Bitcoin, I'll make all of these, I'll change these to Bitcoin. That's how you do it. Bitcoin, so now I've got a Bitcoin screen. Then look, you can copy and paste. That's the easiest. So you can just copy from this is the 1 minute. I'll just copy. I'm just doing this very quickly to show you how to do it. And I'll just paste this in all three. Paste, paste, paste. So I've added the indicator. I'm gonna make this, okay, I've got, I mean, it looks messy now. You've got to basically spread it out a bit, get it going. You just got to, separate the lines. I mean, there are quicker ways to do this. I'm just doing this on the spot. And then you choose your 3 time frames. I'm gonna make that the 1 minute. I'm gonna make that the 3 minute. I'm gonna make that the 8 minute. Make that the 5 minutes. The 1 minute. That should be 1. Sorry, this should be 3. My normal layout. So obviously, I'm going to click off the pivots on some time frames. And so then then you save it. You click save. It's going to ask you a name. Well, it's unnamed. So you just click rename. I've already got a Bitcoin. I'm just going to call this Bitcoin test and save that. So once you've done that, you've now got a separate screen for Bitcoin. So I've done that for everything. So if I click plus here, these are all the ones I've saved. These are my layouts. I've got a Nikkei trading chart. I've got a NAS. I've got a NAS monitor. Sometimes I just put the 1 minute. If I just want to trade one thing, I've got my gold trading chart. I've got a combo if I want to open up just 3 at once. Then I've also got an alerts chart. That's quite useful. So if I'm trading on my phone, on my iPad, I've got my favorite 4 here. So I'll just have them in alphabetical order. I've got the Dow, I've got gold, then I've got the NAS, wherever that's hiding, and then I've got the JPN 225, which is the Nikkei. So then I can just look at all 4. If I'm looking, I can look at all 4 to see what's happening. And if I get a signal on my phone, then I've got this alerts chart set to 3 minutes, because that's the lowest time frame I think you should trade on your phone. So anyway, that's basically how you create a new layout.
One more question. Kat was clarifying. What's the difference? This is a good thing to clarify. Difference between hollow candles and filled out candles.
Okay, that is purely based on buyer or sellers jumping in. So
hollow means?
So if we look at this example here, so that means there are not a lot of buyers in this trade at this point. I mean, it's all quite logical, because the more buyers that jump in, that pushes the price up. So it's just basically, we call it candle strength intensity. We may change it to candle force intensity, which we believe that the force is with us with this indicator. Okay, there's a Star Wars joke right there. But you can see basically, the brighter the color, the more people are jumping in on the trade. So you can see here, this is a counter trend, the hollow, which means not a lot of sellers are jumping in right over there. So it's I did that to help me stay in trade. So look, once they go bright, there's a strong indication that trade's going to keep on moving. I mean, look, this is a great trade. On a buy signal, you're starting off with a full color candle. There was a hollow before. That means already buyers are jumping in. When it goes to bright on high time frames, that's going to move. Then people do ask me, what's happening when you get a red outline, but it's green on the inside? Those red means those are bearish candles, but there's still strong bullish momentum. So when I see those, I see these are pulling back. They are bearish candles, but they're full of green, which means high probability price is going to keep on moving. Stay in the trade if you can. So I don't know if that answers that. And also, when you see range, look at this. Here's Christopher asked about range. When range is when price is going pretty much sideways, and you often will find that either the 233, the 987, when they're virtually parallel, look, you could almost draw a straight line. When these trend zones go parallel, you're in range. And when you get hollow candles, if you look here, for example, mostly hollow candles means that price is going nowhere. So it's price going sideways. And often you find the trend zone narrows completely. So when you can't see a gap between the 13 and the 21, then often that it means the market is ranging. So, I mean, this is the 3 minutes. So I'm trying to look at an example. You normally have to go back to the afternoon. I mean, look, there's a lot of movement here, so we won't go back further. But anyway, I hope I answered the candle question.
So good. Yeah, I thought that was good. One more from Zeph, just because we're getting a little later. TFO, what would you describe the main point of the TFO? We haven't referenced it too much, but the TRENDFORCE oscillator. I think we had one question in the chat about that too.
Okay, well, let's just focus on that. I'll just take that out. So simply there are three elements. You've got the top line, which is measuring your short-term trend. The middle is your main trend bar. Then the bottom is simply just a high time frame. If you look in the indicator, they are labeled. So if you look under style, you'll see short-term trend, main trend bar, and trend confirmation circles. That's based basically on a higher trend, higher time frame. And so basically the red gives you early warning. So if you look here, price began to reverse. Look, we got early warning there already. Look, so already, where is price going in this trend? Well, already the oscillator is telling us potentially it's reversing. So the line will always change color first. And it works the other way. Okay, there, pull back. This before the buy signal, you got quite a bit of advance. I'm looking to see, is the trend changing? So you can see already all these candles back. Your short-term trend is already telling you that things are moving around. The bar is your trend confirmation. So basically bright means strong, dark means usually pullback. So you can see whenever price pulls back, it goes dark, and the bright often means safe to re-enter and it's getting strong. And it's the same for a sell. When it's bright red, strong downtrend, and then pullback, you can see price did pullback in this counter trend. That is pullback, or it could also mean reversing. So here it went dark, but that really was a reverse. And the triangle told us then already that trade was reversing. So basically it's giving us early warning. The trend is changing. The triangles are telling us categorically it's reversing. So that triangle up means now the down move has stopped and now it's moving up. The circles are giving us confirmation. So these circles are calculated basically on a higher time frame. So that's in a nutshell. It's basically to help you show how strong the trend. Again, these things are using different calculations based on different data. So it's measuring other things for the trend. But again, I want to say the 3 minute, it's very strong. So when you see bright green trend bar and bright green buy signal, although the 55 was out of alignment, that trade was definitely going to move. All right.
Cool stuff. Man, there's some action on London, that's for sure, but it is getting a little late. Guys, I can't tell how much I want to go and click through and show you, like, just go back and look at highs of previous sessions. And like, so the Dow is falling off a cliff, right? Sam dropped that in the chat. It literally to the wick came up to the high of the previous London session and nicked out those orders. Not the most recent high, which was on the New York session, but the previous London. So I mark out those previous highs and price just pushed up to those highs and dumped. And it's quite something to watch when you've got key levels marked out and price touches those key levels and turns around. It's a beautiful thing. Same on gold. You've got gold sitting inside of the 50 to 61.8 fib retracement zone, for those of you that know that, on a zoomed out high to low, and it's now kind of inside of that box ranging. But that's the stuff we've got plenty of content to come, guys, that we can cover. But tonight, the main thing was going to be around those signals, and obviously a whole lot of extra Q&A. But yeah, thanks for tuning in live with us. Thanks, Dad, for
having with us tonight. Hopefully you got some value.
Really good. I can tell that was landing and clarifying things really good. But next one, we will see you bright and early Thursday morning, 5 a.m. for our live analysis. And in the meantime, guys, trade safe, sleep well, and we'll see you in the chat.
Yep. Good night, everyone. Thank you for joining us.